Welcome back to the stock portfolio update videos. Currently, my stock portfolios sit at a combined value of 60,500 AUD. This is the first video I've done since my stock portfolio broke $60,000. Close to around 4 months ago, I did a video as my stock portfolios broke $50,000. So it's nice to have broken the next goal for myself. The overall goal is still to get these to 100,000, but my goal before the end of the year is to get it to 80,000 or even more. Currently, I'm on a good trajectory for that, and that's made up of the 36,885 that's in my stake portfolio and the 23,644 that's in my Vanguard portfolio. They're both two very different portfolios. If you look at the holdings in my stake portfolio, you can see it's a lot of individual stocks. Still, 50% of my portfolio is in VOO, which is Vanguard's S&P tracking 500 ETF. The rest is held in some of the big positions, such as Microsoft, which is my biggest individual holding, just over $4,000 in equity, and Apple, $3,200, and then a bunch of other smaller ones. If you look at Vanguard, I only have 2 positions, and they're both quite big. The first one is my biggest, which is VLC, which is Vanguard's Australian Large Companies Index, which just tracks the 20 largest companies here in Australia. And then my second one, which is VGS, which tracks very big, I think it's 1,500 companies internationally. So it still has many of the holdings that I have in my stake portfolio, but some other international ones as well. Overall, it was a big goal for me to hit that $60,000 mark. I feel like it's been evading me for a little bit. Like I said, it's been 4 months since I hit the $50,000 mark, and 4 months for $10,000, it's around $2,500 a month, which is good because the stock market's been going up. But like I've said in previous videos, I haven't been able to invest as much just because of personal life stuff, such as paying for just living expenses and day-to-day things. So hopefully as the year goes on, I'll be able to continuously invest more, and you kind of get the snowball effect. I mentioned it before, my dividends are now bigger. Speaking of dividends, I am expecting some pending distributions on my Vanguard account of around $223, which will be nice. I'll just reinvest those back in, but yeah, I said on previously that my goal for this portfolio was to get over $1,000 in dividends this year. And if I keep going like this, I'll definitely break that, especially when you get to the end of the year and half year. That's when more companies pay out their dividends. So hopefully I can get bigger distributions and I can just reinvest it, and in future years I can use these funds for something else. Something I did want to go through was actually to do with JP Morgan. This is one of my kind of middle of the range holdings. Like I said, it's not one of my biggest, or I have some smaller than it as well. This did actually used to be over 1,500, but I did sell out a bit to invest in Google and Apple, which actually I did at a good time, because if you look at the last month, even the last week probably gives you a better description, it's fallen 6% in the last day. So they did release their earnings, and I can go through that a little bit. Here it is here. We can kind of go through JP Morgan Chase shares drop after bank gives disappointing guidance. The banks said first quarter profits rose 6% to $13.42 billion or $4.44 per share, but guidance of 2024 was not as positive if you've read through it yourself. So kind of looking through, you can see on Friday they posted a profit and revenue that topped the Wall Street estimates, and the per share earnings would have been 19 cents higher, excluding a $725 million boost to an FDIC fee covering the cost from last year's bank failures. Revenues climbed 8% to $42.55 billion as the bank generated more interest income thanks to higher rates and larger loan balances, but guidance for 2024, the bank said it expected net interest income of around $90 billion, which is essentially unchanged from its previous forecast. That appears to disappoint investors, some of whom expected JP Morgan to raise its guidance by $2 billion to $3 billion for next year, and that's why the shares fell. So if you look through it, it didn't really fall because of the performance now. The performance now is actually quite good. It's more the outlook for the future. JP Morgan stock has still had a great year, up 42%. It's had a massive year, and it's been great for me as a holder. My position's up 41%, even with the recent downturn. So I did actually sell out, like I said, around a third of my position $500 and something, and I invested it elsewhere. And that was back when it was around 196, that kind of price around here, 197. So a good time to sell, actually. But I'm still not bearish or anything on the stock. Again, I used it as a way to diversify, because if you had seen any of my older videos, my portfolio was pretty much all tech stocks. I was looking for somewhere else to put my money, like a financial service company or something else, and I landed on JP Morgan. Like I said, the investment's done good for me. I'm up still over 40%, and it still pays good dividend, things like that. But yeah, not a good day for me, down 6%. But hopefully it can rebound back in the future, since it is more about future guidance. It's not to do with the current earnings, but I am happy. I guess I got to sell a little bit before the crash. Again, another thing I wanted to quickly mention whilst I was doing this video was actually just in regards with the channel. So I'm getting closer to 650 subscribers, which isn't big, but realistically, the only reason I do these videos, I always used to say, is to kind of track my portfolios and hold myself accountable. Because when I do these, I can look back at myself. I scrolled through a bunch of my old videos just to see how I've been, and it just kind of keeps me accountable of consistently investing and not taking any money out. And it's nice to track these, and it is good to see sometimes people following along and subscribing or watching the videos. But regardless whether they did or not, I'm still going to just do these videos for myself as well, just to kind of keep myself accountable, and I can look back in the future and just laugh or see how it's been. With my Vanguard portfolio, this is where I've been investing most of my money recently. I'm probably going to be investing even more as I try to buy into VGS to get this to 50%, because I'll show in my Excel spreadsheet after, my VGS position is actually around 40 something percent, and I need to gain another 1,000 something to get it to 50-50. It's had an amazing year, up 28%, and like I said, this tracks a lot of the big companies I already own, and it tracks 1,500 companies from developed countries all around the world. Looking through my Excel spreadsheet, this is what I was talking about before. It currently sits at around 45%, so I need to pretty much get another 5% of it just to split my portfolio 50-50. And then my goal is still to get my VOO position in my American portfolio up to 50%, so I need to invest a little bit more in that as well. But this kind of just shows you how my investments have been going, and this is what I was talking about with holding myself accountable. You can see everything kind of been on a nice upwards trajectory over the last years as I've been tracking it. Vanguard and Stake, I haven't really been pulling out of either positions or portfolios, but maybe I will in the future if I go for a house or something like that. At the moment, I'm just kind of using this as almost like a savings account that I just make videos on, just to kind of track it and hopefully build some wealth whilst I'm at it. That was all for today. I already did a recent video a day or two ago, which was a bit more in depth, but I just want to kind of update on how my portfolio is looking, as one of my holdings had a bad day, and as I've broken 60,000 for the first time. But that's all for now. Cheers.